All right, so we're diving into SPACs again.
We are.
But this time, we're going deep on warrants and rights.
That's right.
You know, those things that come with SPACs and can make them really exciting.
Yeah, we're a little scary depending on how things go.
Exactly.
Like, remember DraftKings?
Oh, yeah, that was a big one.
Big win for early warrant holders.
Huge.
And then there's Nikola. Oof, not so much.
Yeah, that one didn't quite go as planned.
Definitely a cautionary tale.
So we've got a ton of research on this.
Pages and pages.
But it can be pretty dense.
Yeah, it's a lot to sift through.
So we're going to break it all down.
Make it crystal clear.
And hopefully a little less intimidating.
Exactly.
So for anyone who needs a refresher, what exactly are warrants and rights in the SPAC world?
Okay, so think of warrants like a bet.
A bet.
Yeah, a bet that the company the SPAC merges with is going to do really well.
Okay.
It gives you the right, but not the obligation, to buy shares.
At a certain price.
Right, usually $11.50. Rights, on the other hand, are a little different.
How so?
They're more like a guarantee.
A guarantee.
Well, kind of. You get a fraction of a share automatically once the merger happens.
No matter what the price is.
Exactly.
Interesting.
But, of course, there are some caveats with both.
Right. I was just looking at this table comparing them side by side.
Yeah, that's helpful.
Warrants have an expiration date, for example.
Typically 5 years after the merger.
But rights don't?
Nope, they just convert automatically when the merger's done.
And both can be redeemed by the SPAC under certain conditions.
Right, those are the redemption clauses.
Which can be a bit confusing.
Yeah, basically if the stock price goes above a certain level for a while.
The SPAC can buy back your warrants.
Exactly. Or force you to buy the shares.
Even if you don't want to.
Yeah, it's a way for them to manage their capital and potentially avoid further dilution.
Dilution.
Right, when warrants and rights get converted into shares.
It increases the total number of shares outstanding.
Exactly, which can impact the value of the existing shares.
So it's all interconnected.
It is.
Okay, but why should anyone care about all this?
Well, remember DraftKings?
The sports betting company.
Right, people who bought warrants early on.
When the SPAC first went public.
Exactly. They made a killing when the stock price shot up after the merger.
I can see why people get excited about warrants.
It's the leverage.
You can amplify your gains, if you're right.
But of course, you can also lose big.
If the stock tanks.
Like Nikola.
Right, which is why it's crucial to do your research.
Absolutely.
Now, what about rights? Are they as exciting?
Maybe not as exciting, but definitely less risky.
How so?
They convert to shares automatically as long as the merger goes through.
So you're guaranteed to get a piece of the pie.
Pretty much, as long as the SPAC doesn't completely fall apart.
Like Virgin Galactic, their rights holders got shares when the merger was finalized.
Right, not a bad deal.
So I'm starting to see the appeal of both warrants and rights.
They each have their own pros and cons.
But how do you actually use them?
Ah, now we're getting to the good stuff.
Let's talk strategy.
There are a few different approaches.
Okay, lay it on me.
Well, the most straightforward is just trading warrants.
Buying and selling them on the market.
Exactly, trying to time it right to maximize your gains.
Sounds like a bit of a gamble.
It can be, but if you do your research and understand the market...
There's potential for big rewards.
Absolutely.
And what about rights? Can you trade those too?
You can, but it's a bit more niche.
How so?
It's all about finding mispricing.
Mispricing?
Yeah, situations where the right is trading at a discount compared to what it should be worth.
Based on the expected value of the underlying shares.
Exactly. It's called arbitrage.
So you're basically exploiting inefficiencies in the market.
That's the idea, but it requires a lot of analysis and close monitoring of prices.
Sounds complicated.
It can be, but it can also be very profitable if you know what you're doing.
Okay, so we've got creating warrants and arbitraging rights.
Right.
What else?
Well, some people like to combine instruments.
Combine them.
Yeah, during the SPAC's IPO.
You can buy units that include shares, warrants, and sometimes even rights all bundled together.
Exactly. It's like a SPAC starter pack.
Interesting. So you get a little bit of everything.
Right. A bit of stability with the shares, some potential for leverage with the warrants, and maybe even the bonus of the rights.
That sounds like a good way to diversify.
It can be, but you still have to be aware of the risks.
Which are?
Well, there's always the risk that the SPAC might not find a good target company or that the merger might fall through.
And then there's the regulatory landscape, which is always changing.
Right, and market sentiment can be unpredictable.
So even if you do everything right,
there's no guarantee of success.
Right, there's always some level of risk with investing.
Exactly.
But knowing how these instruments work and the different strategies you can use.
It can definitely help you make more informed decisions.
Okay, so we've covered the basics of warrants and rights.
We have.
But now let's get into the real nitty-gritty.
The juicy stuff.
What are the challenges investors face with these things?
Well, one of the biggest ones is regulatory risk.
The rules around SPACs are still evolving.
They are, and any changes could impact how warrants and rights are structured and traded.
So it's important to stay up to date?
Absolutely, you don't want to get caught off guard.
Okay, what else?
Well, market sentiment can be a big factor, too.
How so?
If investors lose confidence in the SPAC or the target company,
The value of your warrants and rights could plummet.
exactly, no matter how good your initial research was.
So you really have to keep your finger on the pulse of the market.
You do, and you also have to be aware of liquidity concerns.
What do you mean by that?
Well, warrants and rights for smaller SPACs can be hard to buy or sell quickly at a fair price.
So you could get stuck holding an investment you want to get rid of.
Or you might not be able to buy in when you want to.
Right, that makes sense.
And then, of course, there's the issue of dilution.
Right, we talked about that earlier.
Even if the company performs well,
The increase in shares from those warrants and rights converting can impact the share price.
it can mute the gains you might otherwise see.
So it's a balancing act.
It is. Warrants and rights offer great opportunities.
But they also come with their own set of challenges.
Definitely.
Okay, before we move on, I think it would be helpful to revisit those real-world examples.
DraftKings and Nikola.
Exactly. They really illustrate the range of outcomes you can have with SPACs.
They do. DraftKings is the dream scenario.
Early warrant holders made a fortune,
Thanks to that leverage we talked about,
but it's not always that rosy.
Nikola is a prime example of what can go wrong.
The stock crashed, and warrant holders took a big hit.
Which is why it's so important to do your due diligence.
Research the SPAC, the management team, the target company.
You don't just jump in blindly based on hype.
Right. It's about being an informed investor, not a gambler.
Exactly.
Okay, so we've talked about the risks and challenges.
We have.
But I'm curious to hear your thoughts on the bigger picture of SPACs.
You mean whether they're a good thing or a bad thing?
Exactly. They've become a popular way for companies to go public.
But there's also been a lot of debate about their pros and cons.
So what's your take?
Well, it's a complex issue. There's no easy answer.
I figured as much.
SPACs have opened up opportunities for both companies and investors.
That's true. They offer a faster and potentially cheaper way to go public compared to a traditional IPO.
Right. And they can provide early access to potentially high-growth companies.
But they also come with risks.
Definitely. The lack of transparency, the potential for misaligned incentives between sponsors and investors, the dilution factor.
A lot to weigh.
It is. But ultimately, whether or not SPACs are a good thing depends on your perspective and your risk tolerance.
Right. It's not a one-size-fits-all situation.
Exactly.
Okay, so maybe we should dive into those different perspectives
Hear what the proponents and critics have to say.
and explore what it all means for investors.
Sounds like a plan.
We'll pick that up next time.
Looking forward to it.
So last time we were talking about all the ins and outs of warrants and rights.
Yeah, all the nuts and bolts.
But now I think it's time to zoom out a little.
Get a bigger picture.
Look at SPACs as a whole.
Right, because they become such a hot topic.
People have some strong opinions about them
Oh, yeah, for sure.
on both sides.
Definitely.
So let's talk about that.
Okay.
First of all, why have SPACs become so popular lately?
Well, for companies, they're a faster way to go public.
Faster than a traditional IPO.
Way faster.
And cheaper too, right?
yeah, potentially a lot cheaper.
Especially for startups and smaller companies.
Who maybe don't have the resources for a full-blown IPO.
So it's kind of like an express lane to the stock market.
Exactly, a much smoother ride.
Okay, but what about from an investor's perspective?
Well, one of the big draws is the potential to get in early
Early on what?
on high-growth companies, the next big thing.
Before they explode in value?
Exactly, like getting in on the ground floor,
Kind of like venture capital.
but without needing to be a millionaire.
Right, because SPACs are open to everyday investors.
Anyone can get involved.
That's pretty cool.
And there's also the element of excitement.
Excitement.
Yeah, because initially, SPACs are kind of a mystery.
How so?
Well, investors don't know what company the SPAC is going to merge with.
It's like a blind pool.
Exactly. You're betting on the SPAC team to find a winner.
So it's a bit of a gamble.
It is, but that's part of the appeal for some people.
The potential for big rewards, if you're in.
That's the dream.
But of course, there are risks too.
Always.
And that's where some of the criticisms come in.
Right. Not everyone is a fan of SPACs.
So let's talk about that.
Okay.
What are some of the concerns people have?
Well, one of the biggest ones is the potential for misaligned incentives
Misaligned incentives between who?
between the SPAC sponsors and the investors.
You mean the people who create and manage the SPAC?
Right. They get a big chunk of equity as compensation.
So they have a vested interest in making the merger happen.
Exactly. Whether or not it's the best deal for the investors.
That sounds a bit shady.
It can be. There's definitely potential for conflicts of interest.
And that lack of transparency doesn't help.
Right. Unlike traditional IPOs.
SPACs don't have as much regulatory scrutiny
So it's harder for investors to get a clear picture.
of what's really going on.
Exactly. It's more of a black box.
So due diligence is even more important with SPACs.
Absolutely. You can't just rely on hype.
You have to do your own research.
Dig deep into the numbers.
Understand the target company's business model.
And be prepared for the risks.
It's about being an educated investor.
Not just blindly following the crowd.
Okay, so we've talked about some of the downsides,
The potential pitfalls.
but there are also arguments in favor of SPACs, right?
Definitely. It's not all doom and gloom.
So what do the proponents say
Well, they point out that SPACs can democratize access to capital.
for companies that might not be able to go public otherwise?
Exactly, especially startups in emerging industries.
Companies with disruptive technologies.
Right, they might struggle with a traditional IPO.
So SPACs give them another option,
A faster and potentially cheaper option.
and for investors,
It's a chance to get in early on these potentially high-growth companies.
like we talked about before.
To be a part of the growth story from the beginning
But with higher potential rewards,
comes higher risk.
that's the trade-off.
Always.
So again, it comes down to doing your research
Understanding the SPAC, the management team, the target company.
and being comfortable with the level of risk involved.
It's not about chasing the next hot stock.
It's about making informed decisions.
That align with your goals and risk tolerance.
Okay, so we've heard from both sides now.
The critics and the proponents.
It seems like SPACs are a bit of a mixed bag.
They are. There are definitely pros and cons.
Benefits and risks,
It all depends on the specific SPAC and the overall market conditions.
and the individual investor's
Right,
perspective.
exactly.
So I guess the key takeaway here is that SPACs are a complex tool.
They're not a simple yes or no answer.
They require careful consideration.
And a lot of research.
Before you jump in,
Definitely.
so what do you think about the future of SPACs?
That's the million-dollar question, isn't it?
It is, are they here to stay?
Or are they just a passing fad?
It's hard to say for sure,
It depends on a lot of factors.
like how regulators respond
And how the overall market performs.
and whether investors stay as enthusiastic.
Well, it's a lot of moving parts.
So I guess we'll just have to wait and see.
Exactly, but no matter what happens,
The lessons we've talked about are still important.
do your research, understand the risks,
Be an informed investor.
make decisions that align with your goals.
Yeah, it's good advice for any investment.
Absolutely.
Okay, I think that's a good place to wrap up this part of our conversation.
Yeah, we've covered a lot of ground.
But there's one more thing I want to talk about.
Oh, what's that?
Those pesky redemption clauses.
Oh, yeah, those can be tricky.
We've mentioned them a few times.
But I think they deserve their own deep dive.
Definitely, they can have a big impact on your investment strategy.
So we need to make sure people understand them.
We'll break it all down next time.
Sounds good.
Okay, so we've been through a lot together, haven't we?
We have
Warrants, rights, the whole SPAC landscape.
the good, the bad, and the ugly.
Exactly. But there's one last piece of the puzzle we got to talk about.
The redemption clauses.
Right. We've danced around them a bit.
They can be a bit of a minefield.
So let's clear the air, shall we?
Let's do it.
Remind me again, what exactly are these redemption clauses?
Okay, so basically it's a way for the SPAC.
To buy back the warrants.
Right, but only under certain conditions.
Like if the stock price goes above a certain level.
Exactly, there's a threshold.
And if the price stays above that threshold for a certain period,
Usually a few weeks.
the SPAC can trigger the redemption.
And force the warrant holders to either exercise their warrants
Meaning buy the shares
at the set price, yeah,
or sell their warrants back to the SEC,
at a predetermined price.
which might be lower than the market price.
Right, so even if you sell back your warrants, you could still lose money.
Okay, so why would a SPAC want to buy back those warrants?
Seems counterintuitive, right?
It does. I mean, wouldn't they want investors to hold on to them?
And potentially drive up the price.
Exactly.
Well, there are a few reasons why SPACs use these clauses.
Okay, I'm listening.
One of the main reasons is to simplify their capital structure after the merger.
Make things a little cleaner.
Exactly, because those warrants represent a potential future claim on the company's shares
Which can create uncertainty.
and make it harder to value the company.
So by getting rid of those warrants,
They make the financials look simpler.
more appealing to investors.
Exactly.
Okay, what else?
Well, there's also the issue of dilution.
Right, we talked about that before.
When warrants are exercised,
New shares are issued.
and that can dilute the ownership percentage of existing shareholders.
So by redeeming those warrants,
The SPAC can limit that dilution.
and protect the value of the outstanding shares. So it's a balancing act.
Yeah.
It is. They want to offer warrants as an incentive.
To attract investors.
But they also need to control the potential impact on existing shareholders.
If too many warrants get converted.
It's a delicate dance.
Okay, so I get why SPACs do it.
But what does it mean for investors?
What do we need to watch out for?
Well, the most important thing is to be aware of those redemption thresholds.
The stock price levels that trigger the process.
Exactly. If the stock price stays above that level for a certain amount of time,
Boom, the SPAC can initiate the redemption.
and you have to make a decision.
Exercise or sell back.
And you usually only have a few days to do it.
So you gotta be ready.
Always be watching those price movements.
And the redemption terms.
Make sure you understand them before you invest.
Read the fine print, basically.
Exactly. And if you're not comfortable with the risks,
SPAC warrants might not be the right fit.
there are other ways to invest in SPACs.
Right, like buying shares or units.
Or even just waiting until after the merger is complete.
And the dust is settled.
There are always options.
Okay, so be informed, read the fine print, and understand the risks.
Words to live by.
And not just for SPACs, but for any investment.
Absolutely.
Well, I think we've covered just about everything there is to cover on SPAC warrants and rights.
From A to Z.
We've explored the mechanics, the strategies, the pros and cons, and even those tricky redemption clauses.
It's been quite a journey.
It has. But hopefully our listeners feel a lot more knowledgeable now.
Empowered to make informed decisions.
Exactly, because at the end of the day,
It's all about making smart choices.
that align with your goals and risk tolerance.
And remembering that there are no guarantees in investing.
It's all about managing risk.
And making educated decisions.
Well said. So on that note,
It's time to say goodbye.
thank you for joining us on this deep dive.
It's been a pleasure.
We hope you found it valuable.
And maybe even a little bit fun.
Until next time.
Happy investing.
And remember, knowledge is power.
Always.